All right, this is really the last takeaway from this portion of the course. Multi-step versus single-step income statement, and then a classified balance sheet. For the most part, really straightforward. I almost wouldn't even leave a video, but I figured I would do it anyway. And I'm not going to subject you to my terrible scribbling. I'm going to use the PowerPoint slides. This is a multi-step income statement. A multi-step income statement, I'm just going to zoom in for a second. The multi-step income statement is going to break out stuff by gross profit first, right? So sales minus cost of goods sold is gross profit. This is the type of financial statement, the income statement, that you'll see most in public filings for corporations. Then after we have gross profit, we have all of our operating expenses, which is the beginning of this section. And there's generally 2 or 3 big categories of operating expenses. We have selling and administrative selling expenses. And then we have general and administrative expenses. Sometimes you would have research and development. There doesn't have to be a limit to the number of categories in this section, but the idea is that we're breaking out gross profit from operating income. Down here, we've got income from operations, and that's just saying, hey, listen, our day-to-day business, this is the income that we're generating. And then we have other revenue and expenses. If we're lending money and we're earning interest on the lending of money, if we sold a building or some physical assets that we'll talk about in later chapters, all of that stuff kind of belongs down here at the end. And then you would think this is the end, but we'll find out that there are actually additional things. For instance, taxes and so forth. But this is net income before taxes in a multi-step income statement. This is a single step income statement, and all we're doing is capturing all the revenue. That portion of the financial statement doesn't look any different. But then we have cost of goods sold, selling expenses, G&A, interest for all of the expenses. Not terribly dramatic. And then finally, we have a classified balance sheet. And I almost want to say we talked about this as well. But a classified balance sheet is going to take assets and liabilities and break them up into 2 different buckets. Short-term assets, meaning all of the things that we intend to convert to cash or use within a year. And then long-term assets, and that's generally like the property, plant, and equipment. Okay, so this is the first section of the asset section. Total current assets, again, those are all the assets we intend to use within 1 year. And then we rank them in terms of how quickly we convert them to cash. So since cash is already cash, it's at the top. Accounts receivable, we're assuming we're going to probably try to convert that to cash within 30 days. Merchandise inventory, right? We first have to sell the inventory. Generally, it may be on accounts receivable, and then we have to convert the accounts receivable to cash. Office supplies are something that we're going to use within that year, right? When you get down to these, come on, who knows which one should be listed first? But I think if you got cash, accounts receivable, merchandise inventory, you're probably fine. And then the liability section, they don't have a slide for it, but current liabilities and long-term liabilities. Current liabilities will be like accounts payable and salaries payable, utilities payable. And then long-term liabilities are going to be if we borrowed money from a bank and we're going to pay it off in something longer than 1 year. So not terribly difficult. That is the last essentially learning component of this portion of the course.